Today's episode is different. This one is not a flex, not a highlight reel. It's about the reality of investing. I made a huge mistake recently, and I'm sharing it with all of you. Just days before Fed Jerome Powell speech on August 22nd, with all the talk of a possible rate cut, I panicked. My single stock positions were all showing deep red, big losses, and I sold them all. On the day of the news itself, and right before the market opens at 9:30, I sold the rest of my portfolio. So what happened next? Jerome Powell gave a pivotal speech hinting at potential rate cuts in September. The market went up. The very stocks I sold bounced. I lost thousands because I let fear control my decisions. And it gets worse. The day when NVIDIA mentioned earnings, I tried to be greedy and bought NVIDIA just as the US market opened. At its peak, at 181 per share for 40 units, thinking the earnings would crush it. Earnings came out, it went up to 184, and the stock dropped fast to about 176. And now to date, hangs around 170. I bought the top. Another mistake. My portfolio used to be at its highest middle of August at 445k. After all the mistakes, it now stands at 437k at the time of recording. Right now, my portfolio is messy and partially reinvested. I'm testing a few things. And yes, this isn't the clean, perfect path I envisioned when I started 8M Trainer. But this is the real life. I did some research and plan to get my investment back in stages. We are going to follow rules and not emotions. With full funds available after selling everything, my plan is 70% core ETF, 20% growth ETF, 10% single stocks, Bitcoin, Ethereum, high risk ETF. September is a month of uncertainty, and it is also the month historically is the worst performer. It is also the month where we have a number of chances to buy dips. There are 4 main chances that we can buy dips and a lot of small ones. First, PCI August 29th, the market went up. Second, news on jobs, September the 5th. Strong uptrend at first, then it dipped. I bought the stocks that dipped more than it started. Third chance, CPI, September 11th. I saw no opportunities. Lastly, 16 to 17, September, the FOMC meeting that would talk about rate cuts and inflation. ChatGPT advised that after meeting on the 18th September, 2 a.m. Singapore time, I should invest the rest of my capital back immediately, whether it is bullish or bearish, so I won't lose out any potential upside. This is the advised strategy of uncertainty, especially months of September, which historically have negative gains. I will reap the benefits if the market goes up and buy when there are dips. After the FOMC meeting, 18 September, there was a 0.25% rate cut. The new Fed target range was 4 to 4.25%, balancing inflation and labor market risk. Market went up, but I bought some tiny dips. The rest of my funds had to be deployed soonest according to rules. Here's what I've learned, and I hope you take this seriously. This is not financial advice, this is my experience. The market is unpredictable. Only buy on rate days, lower your probability of losing. Don't panic and sell when it's red. Use your logic. Don't be greedy and chase green candles. Institutions already price in most of the move. You don't want to buy at the top. I could hide this, I could edit around it, but I won't. 8M Trainer is about the truth, the wins and the losses. If I'm going to grow this portfolio to $8 million, I'm going to do it in front of you, step by step, even when I stumble. If you have made mistakes too, good on you. That means you are in the game. Learn from mine, share your story below. Let's grow together with clarity, courage, and consistency. Subscribe and join me every step of the way. Let's build something incredible together.